Now, the last time I talked to you, we talked about consumer discretionary stocks, what to look for in 2014. Now that it is 2014, what exactly are you seeing going on with bonds?
With bonds specifically, they're buying them. Bonds actually bottomed out on December the 31st, the day that interest rates peaked. So this is a completely new year. These are things that we never saw last year. Last year we saw a bull market in stocks. They were selling bonds all year. So far we're seeing the opposite. And you mentioned consumer discretionaries. Last year was a very important sector, one of the best sectors in the market, one of the best places to be. What's going on so far this year? They're selling the retailers, they're selling the home builders, and they're buying the bonds. That's interesting to me.
You pointed out that going into 2014, it's probably going to pull back a little bit because this is a midterm election year. Do you think that because we have seen stocks pull back the first couple of weeks, that's exactly what's going on now?
I think so. January is an important month, and not just the entire month, but the first week or so. The first 5 days of the year, there are a lot of positive statistics for that. The entire month of January, the January barometer, that's very important as well. So what we're seeing in January, historically, tells us a lot about the rest of the year. And what's happening so far, like I said, they're buying bonds, they're selling retailers, they're selling home builders.
Now, what is it exactly with home builders that you aren't liking right now?
Well, that's a sector that you want to see strong, right? 2012, for example, one of the best sectors in the market were home builders. The market had a great year. Sure enough, they were the leaders going into 2013. 2013 was a great year as well. But throughout the year, as home builders continue to make new highs in price, in fact, the highest level since 2007, 300% off the bottom in 2009, relatively speaking, the deterioration in the relative strength was weakening all year. So it shouldn't be a surprise that with that relative strength weakening last year in home builders, they're weak starting the year this year. And I don't think that bodes well for the market overall.
Now, looking ahead towards next week, we do have another Fed meeting. Now, they surprised many when they did up tapering at their last meeting, and a lot of people thought that we might see some hints if the Treasury yield was around 3%, but it wasn't. It was around 286. But now leading up to this next Fed meeting to see what's Yellen going to do you think we're going to see that Treasury yield around 3 again?
Well, I stopped guessing what the Fed's going to do a long time ago, Jessica, but what I did think was interesting last December, last meeting, is that they started hinting at tapering. In fact, they're trying less hard to keep rates down, right? And what's happening? Rates are now going down. So they're not trying as hard to keep rates down, and yet rates are still falling. So the market is telling us, buy bonds, rates are going lower, and as far as from what I can tell so far, stocks are going lower too.